Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video we're going to be looking at the news for this week as well as some charts of interest, so the week ahead analysis. So let's jump straight into the news then. So we do have some interesting data out this week, including congressional elections in the US. So this is where all the seats up in the House are up for election. 35 Senate seats will also be up for the vote. So at the moment we're seeing the Republicans are more likely to come out on top here at the moment, but you know, it'll be interesting to see how that breaks down over on Tuesday. We don't really see anything then until Thursday. That's the big news day in the US. We have CPI data. CPI actually expected to rise here. Core CPI looking to slow down slightly, but what we could see is if the CPI comes in a lot hotter than anticipated, then that could be a signal that the Fed may not slow down the pace in which they tighten or hike rates into the December meeting. If we do see it a little bit softer, then the Fed may consider slowing down the pace, and at the moment the Fed are likely to go 50 basis points over the 75 basis points at the moment. But I do think if we were to see significant jumps here in CPI, then 75 could still be on the cards for the Federal Reserve. We then have to take note because on Friday we have some pound GDP data, but we also have a bank holiday in the US, in Canada, and we have a French bank holiday in Europe. So towards the end of the week we might get some low volatility. Moving on to the strength meter then, we can see that from the strength meter the pound has actually given back a large majority of those gains. We were in the strongest currency bracket here in terms of we're at the +7, which could often see currencies reverse from, which we have seen with the pound. So pound struggling a little bit to hold those gains. We've seen the New Zealand dollar strengthen significantly ever since it hit the sort of -5 area. Kiwi has been on a pretty much straight path to the upside, so Kiwi still looking fairly strong here. The dollar's trading below the zero line now, so dollar still looking a little bit on the shaky side of things, and I think we'll probably see that for this week until that CPI data comes out. Yen and Swiss bouncing from the lows now, so maybe we'll start to see some of that Swiss and yen strength coming into the market this week. Having a little look at the US dollar index then, we can see that price is trading within this overall bullish channel that I've found on the daily time frame, and price really hugging the lower side of the trend line at the moment, around about that sort of 111 handle. Now I do think if we're going to see the longer term or mid-term downside to the US dollar, a break below 110 will be needed in order to see moves towards the 108 handle or even towards the 105 handle. If price holds at this area here, the 110 or even the trend line support here, then we could see buyers stepping back in with a move, breaking above this trend line resistance and heading towards the 116 handle. Going on to euro then, what does that mean for euro? Euro dollar pretty much the inverse of the dollar index. You can see again I've got my channel placed in here, just haven't got the bottom line in. And on Friday's close we had a significant change in direction on Friday. I think for euro dollar we would want to see price trade above the 10 spot 100 handle or even above parity in order to really give weight for price to start trading to the upside. Very similar to the dollar index. If the dollar index breaks below 110, I imagine euro dollar would be trading around parity or above the 10 spot 100 handle, and if it is, that would give more confluence to a move to the upside, with first sort of resistance being here at the 10 spot 350. Going on to Kiwi dollar then, so I do like Kiwi dollar upside. We're still looking for 0 spot 600 or 6,000 to be tested, or the 0 spot 6 handle. That's what we want to see retested. Nice strong level on the weekly time frame. At the moment we're in that weekly retracement phase. Price is making higher lows and higher highs here. Again, Friday we've travelled to the upside of this bullish channel, so if we were to pull back to the other side of the channel, maybe at the 0 spot 58, that could be a good opportunity to look for moves to the 0 spot 6 handle. Finally then, gold broken out of a longer term trend line here. Seems like the 1620 handle is acting as significant support. You can see it here. Price really failing to trade below that level at the moment, and in fact we've got this kind of double bottom and a break above 1675. So I think if we get another daily close above 1675, then the move to 1730 is highly likely. A trade above 1730 will see price heading back towards the $1,800 level, but that would be if we were to see a poorer number on the CPI, which could help the Fed make a decision on whether it will hike rates more aggressively. If it doesn't and the dollar starts to strengthen again, maybe 1730 could be a resistance point for price of gold. Thanks for watching this video update. I hope you enjoyed it. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.